Welcome to Invest. We talk about investing, finance, and professional development. As our current time of 9:11 a.m. on the Eastern Time on Jan 4th. Hope you guys have a good week so far. Happy Thursday. With respect to Ethereum current trade $2,238, down about 0.09% so far. On the overall market, on the crypto side, we are kind of normalizing, not really moving up or down. But with respect to the equity market, seems like the correction is happening. It has definitely progressed to a lower level, which we'll dive into the technical to see where do we see ourselves going from here, and what's the level for risk management, and also what is the level to be getting in or potentially even getting out, based on the technical spectrum that we're in right now. And let's dive straight into the Ethereum real quick. So you can see that currently we have not really moved much in the last 24 hours compared to our last video. Obviously, we saw this correction that happened during the week, early in the week, because of the SEC, basically a rug pull type of news saying that there will be a delay going forward. But this is something that is kind of like a cry wolf type of analogy now. Like they keep pushing it out, and the timing is also kind of funky because of like the beginning of the year, and also knowing the fact that we kind of ran up for quite a little bit, right? We basically ran up from the 2000 mark all the way to 2445 mark, which we obviously got rejected several times, as you see on the top, 1, 2, 3 times. And then obviously as you keep getting rejected, you have to kind of come back down to a next level, which the next level is somewhere around the current level. But obviously as you sell off, it was more of a black swan events that happened with the news breakout. It definitely drove the overall market to be following through, and that will glide to the next level of support, which is technically $2,050 mark, right? Which we see that we got there briefly and then eventually got bought up very quickly because of all the electronic trading system that kicked into the order, right? But now the question is, like, where do we see ourselves going, right? But you could use the color coding system that we've been talking about in the last videos. So let's just do the exercise together, and for us to assess, like, where do we see ourselves going from here. So right now you can see that on a daily we at the 48 out of 70. We're on the right side of the spectrum. So on the color coding spectrum, like red, green, red, yellow, green, I would give this relatively like a greenish yellow, right? But is it a good level to be getting in right now? I would say, a more tolerable level will be contingent on the weekly perspective. So let's take a look at the weekly. So the weekly is very extended right now at the 63 out of 70, large separation. So you could see that we are kind of gliding, holding on by these two needles right up on top, which we have made since April of last year, right? But is it sustainable? I would say based on the technical level that we see on the weekly, it is foreshadowing that we will see more of a sell-off coming. So this, well hump is forming an apex right now. So that means that weeks out, we should see lower level. To see 2000, like low 2000 again, or even 1850 is not going to be a surprise for us. And also on the monthly, you could see that we are, at a moderate level of 56 out of 72. At the level that we at right now, you see that we have these 3 candles that have been durating so far, and we're kind of cooling off right now. And also, unfortunately, on the wrong side of the spectrum, so we do need to correct before we go up from here. And apologies for the gardening tools in the background. I don't know why. I mean, I do live at home, so I guess it's not an accidental event for them to be cutting grass in the morning, but it's definitely annoying, so apologies for that. So I would say on the overall spectrum, monthly is more like reddish, like an orange. So if you kind of mix this all together, right, monthly is like an orange, weekly is a bright red because of the large separations and also extensions that we add right now. The daily is definitely more tolerable, but this is more of a riskier trade. You could kind of do a swing trade on a daily perspective, get in on the same day, get out on the same day. But with respect to, is it a logical level to be holding weeks out? We do foresee a lower level coming in weeks away. On the Bitcoin side of the equation, we could see that on a daily, we are also on the right side of the spectrum. So I'll give this like a, relatively yellowish green, right? And then on the weekly, very extended, 72 out of 70. So no need to kind of explain it, right? We're very extended. So it's like a bright red, not even red, just like burgundy red. It's like bruised red. On a monthly, we also quite red at the 63 out of 70 on terms of the risk level. We are basically holding on by a thread right now at the $43,000, but the level that we should get back to, ideally, before you even feel like it's a tolerable level to be getting, it will be breaking the 40,000 and then going down to the 35,000 mark. So take a look at the equity side on the SPY front. You can see that the sell-off has definitely progressed. It's not a surprise for us. On a daily, we have definitely cooled off a lot more than days before. You were in sky at 81 out of 70 at one point when we were reaching all-time high because of all the macro drivers, right? The Santa Claus rally, the fund managers do this window dressing, but obviously with respect to holiday sales and just more rosy picture at the end of the year, it's not a illogical explanations for the market to go up the way it did, but also on a technical spectrum it made sense as well. But right now, in the Q1 season, which is typically a red quarter, you're encountering obviously tax season. You're encountering more of a digestions of what happened with the prior year. Of the bull rally that people will be ideally taking profit, so you're dealing with this type of factor before the bull run that will happen in the near future. But in terms of timing, let's take a look at when will that be, right? So weeks away, you could see that we are also still quite extended, right? So unfortunately, we do see more correction to come. I think ideally coming down to the 448, 450 level. So that means that you should ideally see further sell-off coming, which is not that illogical from here. So it seems like we're forming apex right now at the 65 out of 70. On the monthly 61. So I would give this like a red. Weekly, even more mega red. Daily, it looks like a yellow, right? So if you mix that together, it's like a deep orange, like a I don't know, tangerine, like a really ripe tangerine, if that makes any sense, or like a persimmons, if you know what I mean. Have you ever eat that fruit before? But anyways, but hopefully this is helpful. I appreciate you for joining me today. I think the market is definitely trading in the right cadence. But if you want more specific coaching, I'm happy to provide my guidance. Have one-on-one coaching sessions to talk about your portfolio. We can go through the stocks that you are investing in individually, and we could talk about the technicals and when to get in and when to ideally get off. And I can do that. So just feel free to subscribe to our Patreon. It's only like 50 cents a day. So any support that you could give me will be very appreciated. But if you want more specific coaching, I can also do like a weekly and also monthly session with you for an hour to kind of go through this. So just let me know. I appreciate you. Have a good day and take care. Bye.